What do you think about Alibaba's prospects going forward? I mean, have you come down to a neutral rating just because of the drop in the share price, or do you think that they are also on shaky ground as far as their profitability outlook?
Yeah, the reduction in rating was more a function of how I see the growth going forward. At the time of their IPO, they were growing top line 40, 50%, and there was pretty good visibility into 30% earnings growth, and that justified a higher multiple level, a very high growth multiple. They've now slowed down from that. Their revenues slowed down, their margins are contracting, so now we're looking at probably at best 20% earnings growth. That's a very different tier of growth, so we took down our multiple on our forward numbers, and with that came down our price target and our rating on Alibaba. We still think that Alibaba is a good investment in the growth of the Chinese consumer. They're by far the market leader. They've executed very well over the years. It's just that the growth trajectory is lower, both in terms of what they've performed and the outlook for the Chinese economy and the Chinese consumer.
Gil, how uncomfortable are Alibaba's investors right now?
They're very uncomfortable because over the last couple of quarters, expectations have come down 2 or 3 times in a row. And in fact, just last week, they were at an investor conference and reduced expectations again. And that's not something investors want. Investors want to feel good visibility into the outlook and feel like the bias is going to be upwards. And for the last 3 quarters and, again, intra-quarter, expectations have had to come down.
What can Alibaba do going forward to spur more growth, the kind that you saw at the IPO, or do they need to? I mean, is this just a maturing company?
It's a maturing sector for sure, and it's become more competitive. All Alibaba can do is continue to do what they're doing, which is execute very well as the market leader in e-commerce. But at the end of the day, their growth is going to depend on the growth of the Chinese consumer and their ability to ward off their competitors. And specifically, competitors like JD are basically Amazoning them. JD started with the direct business of being a first-party e-commerce operator and is expanding it to Alibaba's marketplace business and utilizing things like same-day delivery to do that. For Alibaba to remain competitive against especially competitors like JD, they need to be more aggressive in creating the immediate availability of products, especially in the big cities and the second-tier cities.
What about here? I mean, does Alibaba need to be here, Gil? Do you think that they're going to be able to, do they need to, or will they be able to push into U.S. business?
Only longer term. So if we're saying the Chinese e-commerce business is maturing, it's still probably growing 30% a year. For them to go into a market such as ours, which is growing more like 10, 15% a year, wouldn't necessarily be the highest growth opportunity. Their biggest opportunities are actually places like Russia or Brazil that are still very fast-growing e-commerce markets that aren't as consolidated in terms of share. They have the bigger opportunity there.
Right.
But eventually they will come to the U.S. as they become a global e-commerce provider. They're planting the seeds now. I would expect to see them within 3 to 5 years.